Number one, we have positive leverage, Dylan. That means our cap rate is higher than the interest rate on our debt. We bought a shopping center, a grocery anchored center at a 9 cap recently, 9% yield. Our debt was at 7%. So by adding debt, you increase the cash return to your investors. We're buying a shopping center, an enclosed mall. We own 14 enclosed malls. We're buying one at a 16 cap, and our debt is at 6.5%. So our cash on cash yield is over 20% to our investors.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Andy Weiner, is the founder and president of Rockstep Capital, a vertically integrated real estate investment firm based in Houston, focused on shopping centers in secondary and tertiary markets. He earned degrees in economics and political science from Stanford, an MBA from the University of Texas, and completed Harvard's retail executive program. You can find him at rockstep.com. Andy, thanks for taking the time today.
Hey, excited to be on, Dylan. Thanks.
Now, when we talk about shopping centers, I'm a little bit of a fish out of water in this space. I'd like to start off at the top and ask you how you got started in the shopping center space.
Sure. So I got started a long time ago. Our family, my grandfather started a chain of 150 clothing stores called Weiner stores, our last name. And I ran operations for the company. So I learned all about retail, about retailers, about shopping centers. And then in 1997, I started this business investing in shopping centers and have been doing that for almost 30 years. We built or acquired about 10 million square feet of shopping centers, and we have them in 11 states.
Now, these days, I've heard a lot of talk about how it's difficult to do new construction in so many different realms. For folks who are getting into shopping centers right now, are most shopping centers deals right now being built from the ground up, or are they acquiring pre-existing structures and then, transitioning them into shopping centers?
Great question. So almost all of the shopping centers today are existing. Very few are being built because the cost of construction has gone up by about 40% in the last 3 or 4 years, and interest rates went up. And retailers aren't paying that additional rent to justify new construction.
So now when folks are looking at, which markets to get involved in, which areas to put shopping centers in, and then also, acquisitions costs. This is, again, a fish out of market in this space. But what are some of the key factors which you're looking for to determine, hey, is this going to be an area where we want to acquire property in?
So great question, Dylan. We invest in what we call hometowns. We define it as hometowns. We have a fund called Hometown America. And these are secondary, tertiary markets that have something driving growth. You have to have great quality of life, school system, low crime, an invested community. But you have to have something driving population growth. One of 5 things at least: university, tourism, growing hospital districts, military base, Fortune 1000 companies. So these are cities under 1 million, more than 100,000 that have something dynamic related to population growth. Those are hometown markets that we target.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Now, shopping centers specifically is an interesting niche because I'm imagining, and I could be totally off base here, that this is very much impacted by, the jobs and how well people are doing. And, when people are not doing as well, and when markets may be down, they're going to be less likely to do things that, you might find in a shopping center. Am I off base in that, or is there some accuracy there?
You know what? I generally think that in the smaller communities, even if there's a recession, they're generally steadier. They don't go up as much when times are good, and they don't go down as much. They're kind of boring cash flow plays, which is where we like to invest. That's the geography we like, and our product type is open air grocery, open air non-grocery, and enclosed malls. And in retail, there's two things going for it today, why it's such a favorite class. Number one, we have positive leverage, Dylan. That means our cap rate is higher than the interest rate on our debt. We bought a shopping center, a grocery anchored center at a 9 cap recently, 9% yield. Our debt was at 7%. So by adding debt, you increase the cash return to your investors. We're buying a shopping center, an enclosed mall. We own 14 enclosed malls. We're buying one at a 16 cap, and our debt is at 6.5%. So our cash on cash yield is over 20% to our investors. So one, you've got positive leverage. It's the yield sector. Number two, Amazon and COVID killed the weak players. Those that are left have their own e-commerce strategy and are holding market share. And they're telling Wall Street that we're going to grow Aldi, 225 stores a year. TJ Maxx, 140 new stores a year. Burlington, 110 stores a year. Ross, 100 stores a year, and on and on and on. But there's no new shopping center. So different than multifamily where they're still being built. Well, if you own a second generation existing shopping center and all these companies want to open up thousands of stores, that's a good position to be in supply demand wise.
Now, for folks who are looking at getting involved in this space, and they're looking at, what type of tenants to work with,
Yes,
I've heard, for instance, if you're going to go with a higher end corporate tenant, that they're going to have a standard to which they're going to want the property to be at. So you may have to put in more time and money into
correct.
rehabbing the property to get it up to their standard versus someone who's not going to be a national or a corporate tenant. And I'm also thinking, if you're talking about tenants who need lots of space, this is now a larger upfront cost that you have to outlay when dealing with a national corporate tenant like that.
When you buy a center, generally shopping centers are 90 to 95% leased. So there's not a lot of vacancy. Now, if there is a new tenant that wants to come in, and they're a national tenant, you have to make a decision whether you want to invest in their tenant improvement dollars that you have to give them or whatever work you have to do. And that's just a return on investment calculation. Do you get a 12 to 15% return minimum for a national credit tenant on return on investment? Income received divided by total cost of getting that tenant in. If this shopping center is worth an 8 cap and you can bring a tenant in that has anything significantly above an 8% return, you're producing value. So those are the decisions that you make all day long. You become an investment manager for that shopping center.
Now, specifically, you mentioned open air, and I think that this is an interesting concept, right? Because I think it talks to the type of experience that people want to have, and I think when people are making the time to go out to go shopping versus order online, it's because they're looking for some type of experience in many cases. Are you seeing this as being a trend across the board, not just in secondary, tertiary markets, but everywhere, where if you have some type of shopping center, that it's got to be an experience in addition to just being a place where people can go to buy things?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
The answer is yes, but I will also add that what retailers have found is that if they just had a pure play, if they didn't have stores, their cost of acquiring new customers gets so prohibitive that it becomes unprofitable. They need stores to protect their brand, build their brand, and it's the lowest cost of customer acquisition. So when they open up a store, what's interesting is their e-commerce sales in that geography rise. They don't go down.
Hmm.
So the perfect situation for a retailer is a great set of bricks and mortar stores, a wonderful app, and then an e-commerce fulfillment strategy that connects all the dots. And so retail stores are really an important part of that strategy for these retailers that have survived COVID.
So it's a huge thing that you're the first person to bring it to my attention like that. This is marketing, right? So yes, they're selling a physical product, whatever that may be, but it's marketing as well. Because if someone can, has so many different options and ways where even food they can get,
Sure.
delivered or pick up or just drive and someone will walk out with their groceries. Why go to one place versus another? It's because they're going to have some level of brand loyalty, whether it is an Aldi or whether it is, a Whole Foods or wherever they're doing their shopping at, right?
Yes. Yes. And then the other piece is that one of the big drivers of the growth of the shopping center sector is off-price retailers. TJ Maxx, Marshalls, Nordstrom Rack, Ross, Bell's Outlet, Burlington. So these companies are opening up hundreds and hundreds of stores, and women in particular, the experience of finding great buys really pulls a lot of women into stores. It's very, there is online doesn't quite do it. And these companies are extremely profitable and they're growing dramatically.
I actually am thinking about that right now as you're talking about it. This idea of, hey, I went in and took my time and found something that's like this niche buy. Hey, I had this great experience. That's part of the process for them, more so than it might be if they were just buying online, right?
Yeah, and I just did a video. So we have an education center at rockstep.com, and our goal is to become to be the leading educator of investing in shopping centers. So we have over 100 articles for people who don't understand the sector. We've got videos. We just released a video. We have a YouTube channel called the Shopping Center Channel, and there's a video on it about TJ Maxx, and it tells a story about off price and why it is so successful. And so for people listening to your podcast who want to learn more about retail and shopping centers, I encourage them either to go to the Shopping Center channel or to go to rockstep.com to the education center and just delve into the videos. You have over 200 articles on everything about shopping centers. We have dozens of videos about every aspect of shopping centers, really just to educate people.
I do want to pivot a bit here, Andy, and
Sure.
ask specifically about the name Rockstep. We were
Yeah.
talking before hopping on here. I know it's an interesting
It it
name,
it
right?
it is very important name for me, Dylan, but it's not a word that you would find in the dictionary. It is a dance move, okay? So do you it comes from swing music. Swing music, the swing era of the 1950s, 1960s, Frank Sinatra. When you swing dance with your partner, you switch directions on count 7 and 8. 1, 2, 3, 1, 2, 3, rock, step. So dancers know the word. So they know what it is. Most other people don't know what it is. So we use it as a metaphor to be nimble, to be agile, to be responsive, to listen to the music in the industry.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And so as a verb, Dylan, we got a problem. We got to rock step. Or Dylan, there's great opportunity. Let's all rock step together. And everybody in our company, we have about 100 employees, they know what that verb means. Second, I wrote 26 very, very, very detailed rules of behavior that are called rock steps. And everybody at Rock Step is required to live by these rock steps. And we have a rock step of the week. We've been doing it for 10 years, twice a year. The whole company gets on a Teams call at 10 o'clock Central on Monday, and we talk about the rock step of the week. This week, it is rock step number 9, listen generously. One person writes an essay, an inspirational essay. What does it mean to listen generously with our personal lives and our business lives? And then they call it random, 2 or 3 other people. Dylan, what does it mean to you to listen generously? Everybody's on their seat thinking about what does it mean. And next week, we do rock step number 10, speak straight. Somebody else writes an essay. And we go through this exercise twice a year. And there's nothing more important to this company than our rock steps. I am emotional to the mat about it. If anybody comes for an interview at Rockstep, we're always looking for great people. You got to go to rockstep.com, look at the 26 rock steps here, and you got to come prepared. What are your favorite 3 rock steps and why? What are your most challenging 3 rock steps and why? My favorite, I'll give them to you real quick. Rock step number 1, do the right thing always. We're the investment business. It's a world of gray. You got to stop. You got to figure it out. Rock step number 2, keep family first. Health first, family first, then rock step. Rock step number 5, be punctual. On time for me is 5 minutes early, and if you're on time, you're late. It's about courtesy. Most challenging for me, rock step number 6, be responsive. It's hard for me to keep up. Too much coming at me. Rock step number 9 this week, listen generously. My wife would say, Andy, you've got room for improvement here. I'm impatient. It's an issue I'm working on. And then rock step 26, keep things fun. My wife says, Andy, you take the fun out of fun. I'm very serious. Okay. And so this is central to who we are. This is what we use to build trust, to build a team, to resolve conflict. We're required to live by these rules with our tenants, our investors, our communities, our lenders, our service providers. This rock step is the critical part. I wrote every word. I wrote every sentence. And we have this ritual for 10 years. Every week we have a rock step of the week. We have people from Blackstone and Brookfield and CBL, some of the big REITs who work with us. One of the reasons I think they work with us, I hope, is that we really try to live by this. Not perfect, but I go to the mat on this stuff. So thank you for asking.
Absolutely. As we're talking about Rockstep and the genesis of the name, I'm thinking about my country dancing that I did in San Antonio.
You were rock stepping. Absolutely.
Definitely a rock step.
Okay, you probably have heard the word. If you had a teacher there, they were telling you, okay, rock or ball pivot change. It's kind of, but they use the term rock step.
We are coming up on time here, though, Andy. Any new projects that you're working on? And then as well, what's the best way for folks to reach out to your team?
So the best way is to go to our website, rockstep.com, and you can learn, you can certainly contact me on the website. I recommend going to the Education Center and just going through Retailing 101, Investing 101, Rockstep 101, and then you can go to more advanced articles and videos and just educate yourself. That's the best way to reach me. And then if somebody really likes what we do, we have a fund called Hometown America where we can give you information on our goals to double people's money in 5 to 6 years by investing in income producing shopping centers in Hometown America.
Andy, thank you so much for coming on the show. Thanks for your time today.
You're welcome, Dylan. My pleasure.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.